Hello and welcome to our trader training video series. On this video we're going to start looking at the options, and you can find the information about the options under this trade tab. So on this screen we've got a lot of information. It looks kind of like a spreadsheet, which is fine. That's how it's supposed to look. The first thing that we need to point out is this top line here, the underlying. It's usually referencing the stock, in this case HD, Home Depot. It's usually referencing the stock. We have some information about the stock. We've got the last traded price. We've got the net change, the change in price as it relates to yesterday's close. We've got the bid and the ask. This is the buy and the sell price. The difference between them is known as the spread. And we've got some other statistics here. We've got the volume, the number of shares traded. We've got the opening price for the day, the high for the day, and the low for the day. So all this data is referencing the stock itself. So if I wanted to buy 100 shares, for example, it's going to cost me $120.63 per share. Now, we're going to be using options to place our trades and put our trades on. So over here, we can see that we've got something called an options chain, and it's referencing all these lines here. The option chain is all the details and information about the available options for this stock. So just to remind us, for those that are new to options, and the simplest way to think about an option is it's like a deposit. So if I was to go into a car dealership, just as a quick example, if I was to go into a car dealership and I said, you know what, I really like that car in the corner, but I don't know if I want it, I'll make my decision at the end of the month. The end of the month might be 30 days away. So I'm not going to give the car dealer 100% of the car's value. I'm going to give, a fraction of a percentage of the car's value, a deposit, maybe a 10% deposit, just as an example. So I'm going to have a percentage of the car's value as a deposit, as a surety, so that the car dealer will hold that car and sell it to no one else for 30 days. And if they don't hear from me on day 31, that option disappears, because on day 31 it's back on the open market. Now I can let the dealer know anytime prior to the 30 days being up to let him know what I want to do with my option. So an option, like a deposit, is, in this example, it gives me the right to buy, but not the obligation to buy. That's the fancy term. So the right, but not the obligation. So I'm putting a deposit down for the right to buy, but if I change my mind, I don't have to if I don't want to. So that, in the options world, is called a call option. So a call option gives us the right to buy. Now, one thing that's unique that we don't often hear about in other areas of the real world is that we can also offer the right to sell. So I can do the exact opposite. So if I've got a call option that gives me the right to buy 100 shares, I can also have something called a put option that gives me the right but not the obligation to sell those shares at some point in the next, again, let's just use the 30-day example. So we can have a good idea of what we want to do. So instead of buying stock, hoping that the stock price will increase, we would likely buy a call. And instead of selling short stock, hoping for the stock price, and our benefit would be if the stock price did decrease, that would be selling short. Instead of doing that with stock, we would buy a put that would benefit from the stock price declining. Now, we also get this 30-day or X number of day window to decide what we want to do. So again, thinking about this car example, I've got 30 days to decide whether I'd like to buy that car or not. And if, let's just say, if for example, the value of our car increased in value, then the value of my deposits would also increase in value. So we have a proportional increase in the deposit value that is related to the car's value. And again, we're talking about the stock market, so let's just change the words. The stock, if that was to increase in value, then my option would have a proportional increase in value as well. If the stock declines, let's just say that it does, so if the stock declines, and let's just use a drastic example. If the stock declines, and let's say it's a $100 stock, and it goes to zero, then because I've only put a deposit down, and I might have, say, used a 10% deposit, just as an example, I only lose my deposit. So I wouldn't lose $100 per share. So I only lose my deposit. So we get all the benefits of the stock price movements. If we see a favorable movement, we get all the benefits, but we don't get all of the downside, which is fantastic. So this is what we've explained several times on a few different videos now. What we're doing is we're just looking at this in more detail. And hopefully what you're starting to see is that in the options worlds and financial trading, there's not that much difference to probably things that you've already seen in different areas of the real world. You've probably had experiences with options and in other areas of your life, but not necessarily realized that it's exactly the same thing. So hopefully it's not going to be too overwhelming for you, because you're probably already very familiar with the principles that we have when we use the term options in the finance world. So that's the principle of options. On the next video, we're going to look at those in some more detail, and we're going to start to look at what all these figures mean, and we can start to dive into how to interpret what we're looking at. So I will see you on the next video.